right, five, four, three, two, one. On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to this edition of the Money Path. I am your host, Todd Schoenberger, and I am joined with who's joining me today is Rhys Williams. He's chief strategist at Wave Capital, just outside of Philadelphia, Pennsylvania. However, Rhys is joining me from another location. He's welcome to disclose it. I won't for him. But Rhys, I do want to get into the data that just came out an hour ago, which is from the BLS, the revisions on jobs. They're actually saying that the U.S. economy, the government, actually misreported monthly jobs numbers by almost 75,000 per month over the last 12 months. We see a little ho-hum action in the markets right now, but we see bonds rallying, thus solidifying the idea that we probably will see an interest rate cut. Are you seeing that as the same next week? And also, if so, how much?
Oh, that is interesting. I think a lot of it will depend on the upcoming CPI and PPI, but I do think 50 basis points is actually on the table now, potentially, and potentially if the administration will just sort of be quiet and not look like it's politically forced, I think there's much more likely chance of a 50 basis points. But I think 25 is absolutely guaranteed. My guess is the CPI and PPI numbers are going to be an uptick again from last month, sort of somewhere around that three area, and on the CPI, and so I think that's an environment where it's not really stagflationary yet. I think people bought in a lot of inventory in that first quarter because everybody knew tariffs were coming, and then the second quarter because they knew about D-Day in June and July. So I think everybody got up to the gills in inventory. So you really haven't seen the dramatic price increases yet because you have the inventory from non-tariff goods. But you sort of run out of inventory now. So I do think you are going to start seeing in the fourth quarter and the first quarter. And by the way, the companies that can produce things in the U.S., they'll be happy to raise prices along with it. Why not?
Yeah, you're right about that. Well, you mentioned the inflation data coming out. We have PPI tomorrow. CPI is coming out on Thursday morning. That seems to be more of a headline number will move markets, that will move markets. But the question I have is, okay, you're talking about 25, possibly 50 basis point cut when the Fed reports on September 17th. But what do you think going forward, though? The consensus seems to be two cuts for the final four meetings this year. Are you in the same camp?
Yes, and the reason is I do think you do have a stagflationary risk. I mean, I think if we didn't have tariffs, we would have four cuts. But I think the fact that you have these tariffs, and this is a great experiment. Nobody's ever seen tariff. Well, we did see it in the 1930s, but we haven't seen it in a long time. The kind of the dramatic increases in tariffs. So really, nobody knows exactly how it's going to play out. But the thesis that you could have rising prices at the time that the economy is falling and unemployment's going up, that's the definition of stagflation. So I do think that will maybe keep things from going from four cuts. But if, like I said, if you didn't have the tariffs, I think you'd have four cuts.
So you mentioned the tariff side. And so, as you know, a lower court has actually ruled that the White House's stance on tariffs is illegal. That has been pushed to the Supreme Court. The White House has asked for an expedited decision, which looks like we will be getting something in November. If the Supreme Court comes back and they say that the tariffs were actually implemented in an illegal fashion, meaning that now the US government will now have to rebate all of these countries that we've been imposing tariffs on. What kind of an impact will that have on the US economy and also the stock market?
Well, it's interesting because nobody's ever seen anything like that. I guess you have, if the President Trump would just say, "Oh, well, that was a really bad idea, and we're going to move on," then I think that would be one answer. But that is a very unlikely response. So I think they have other means to go after on an individual industry basis to go after tariffs. I mean, this is the absolute cornerstone of the economic policy, and I think he's determined to see if this experiment works or not. So my guess is temporarily the markets will rally. Certainly, I think in general there's very little constituency outside of 1600 Pennsylvania Avenue for these tariffs, but there is a big constituency inside 1600 Pennsylvania Avenue. So I do expect tariffs to continue. Sure. So short term, I think you rally, but longer term they'll just figure out new ways to bring in more tariffs.
Valid point. I like that. So let's talk about this a little bit. So you have the potential of interest rate cuts, which should be a boost to the real estate sector. Are you of the belief that that it's time to be bullish on real estate, or should you just remain cautious and stay on the sidelines?
Especially looking at REITs, they have been just disastrous for the last three years plus. And so I think that that's an interesting area and pretty low risk. There's not a lot of excitement about them. Nobody's saying, "Oh, did you hear about my great REIT fund?" So my guess is that that's probably a pretty attractive area, especially defensive REITs, i.e., apartments, things that people have to own. Probably offensive REITs might not be so compelling.
I like that. Defensive reads. That's definitely a new way of looking at it. And brilliant, brilliant analysis. So let's turn the table onto the stock market right now. The numbers that came out from the BLS did nothing to move the markets. Obviously on the bond side, which I mentioned, is moving. The On the equity front, you've been on multiple shows on BTT, and you've been beating the drum about AI. What's your stance? Are you still thinking AI is the one and only place to be as we go further into Q4 in 2026?
Well, I think it still has the most dynamic growth characteristics in the economy right now and is probably the least impacted by tariffs. Trump's already said that he's going to give exemptions to anybody that has anything to do with the AI build out because he really wants the AI build out in the US. So you take that one sort of Damocles and remove that from at least the AI companies. So yeah, I don't see anything that goes wrong with this trade. I think we're fairly early in it. That yeah, it's not a new thought now. I mean, I'm saying obviously AI has captivated the imagination, but you remember 1996, the internet had captivated the imagination, and Alan Greenspan talked about irrational exuberance in 1996, and 1997 was great, and 1998 was great, and 1999 was incredible, right? So I mean, I think we're in that moment where people recognize AI is a real thing and it's coming, but there's still opportunity to make a lot of money.
Yeah, I have to agree with you there. So let's talk about overall picture though for equities. We had Ed Yardeni on last week. He is exceptionally optimistic. He actually has a 7,500 forecast on the S&P 500 at the end of next year. He has 10,000 by the end of the decade, at end of 2029. So truly remarkable growth. Are you that optimistic, or do you think you might be pulling back just a little bit as we head into the new year?
Listen, I think there's probably some rockiness coming up just because there was a pull forward of demand because of the tariffs. So you're going to have already slower period of growth in that third and fourth quarter. You have, as you point out, job growth is de minimis. Anecdotally, it was a really tough year for college grads to especially get their first job. Maybe that's a lot of that's kind of AI driven in some extent that you just need fewer bodies to perform a lot of tasks. So you have a series of things, and then you're going to have the inflationary impact of whatever the tariffs do. What we'll find out in the fourth quarter, and the first quarter what's happening. So this very transitionary period, you might have some rockiness. I think you buy the dip because I do think Ed. I mean, I got in the business in 1987, and Ed Yardeni was the Prudential Securities economist, and he's been right for 45 years. So
Right.
he's really I don't know what his I've never tracked exactly his batting average, but it's very high. So
Yes.
I would not bet against Ed Yardeni.
No, definitely not. No, I completely agree with you. I want to turn the subject or topic over to gold. We saw gold hit a record high again today. We crossed the 3,700 mark. As for the other commodities, silver's actually down. Oil is up, but that's because of the what's taking place in Qatar right now, with Israel hitting the Hamas leaders that are hidden there. But with that, with gold, do you see this as the place to be going into Q4?
Well, obviously, there's been a great bull market in gold here, so it's not a new thought. But gold does have some interesting security aspects to it. And if people get nervous about the dollar, get nervous about U.S. leadership, all the things that could go wrong in the next 3 or 4 months. So gold should continue to work, I think, for that reason. But I will say, typically, when everybody gets excited about a commodity, it's time to sort of lighten up. So that would be my only caveat, that I like gold. Everybody likes gold. It's a good story, but you tend to want to sell commodities when it's a very good story. So that would be my only caveat. So I would not be aggressively buying. I'd keep holding my gold, but I would not be adding here.
Wow. Okay. I like that. That's some great analysis there. All right. Well, Rhys, I'm going to leave it there with you. I know it was a quick segment. I just really want to get your thoughts on the breaking news of the day. I know we're going to have you back on all the other shows that we have at Crosscheck Media, and I always enjoy your comments.
I always love cross-check media, and I watch it religiously. You have a lot of great guests.
Well, I appreciate that. And coming up later today, we do have another great guest. Is Jim Bianco is going to be joining the show at the market close. He will be live. We're going to be talking all about obviously the Fed and interest rates and the upcoming inflation reports, but he also has some Fed drama for us. So you definitely want to tune in for that.
He,
So Rhys, thanks again. And on behalf of Rhys Williams, I am Todd Schoenberger. Thank you for joining me on the Money Path. We'll definitely catch you next time. Take care.
Thank you. Bye-bye.
Bye. Thank you, Rhys.
Thanks very much.
Hold
See
on,
you.
Rhys. Hold on. Hold on.